Every pilot knows what it feels like when turbulence starts to build. The ride gets rough, the instruments start moving, and everyone in the back starts wondering, is this aircraft okay? Most of the time, the answer is yes, because the aircraft was built for exactly that. Now, think about the last 12 months for investors: tariff uncertainty, interest rate noise, macro headlines every week, a lot of turbulence. And yet, Visa just filed a captain's log that looked like smooth air at cruise altitude. Revenue up 17%, non GAAP earnings per share up 20%, payments volume up 9%, cross border volume up 12%, processed transactions up 9%. Those are not stall warning numbers. Those are gauges reading in the green. The plane is not just okay, it is still accelerating. This is Captain Pierce. Welcome back to SkiesCapital. Think clearly, invest better. Today, we are breaking down Visa's Q2 fiscal 2026 earnings, what happened, what it means, and what long term investors should be watching next. Let's go. Let's start with the numbers, the ones that tell you whether the business is climbing, leveling off, or descending. Net revenue came in at $11.2 billion, up 17% year over year. That is not a rounding error. Visa called this its strongest net revenue growth since 2022. And that matters because this was not just one part of the business carrying the quarter. The strength showed up across the network. Non-GAAP earnings per share came in at $3.31, up 20% year over year. Wall Street was looking for about $3.10, so this was a clean beat, not a barely cleared number. Processed transactions were 66.1 billion for the quarter. That works out to roughly 726 million transactions every single day. Think about that for a second. More than 700 million times per day, someone somewhere in the world swiped, tapped, clicked, or moved money across Visa's network. And total payments volume was $3.7 trillion, up 9% in constant dollars. So the first scan of the cockpit is clear. Revenue is climbing, earnings are climbing, transactions are climbing, payment volume is climbing. Captain's read, gauges in the green, strong climb. For a long-term investor, that is exactly what you want to see in the flight summary. This is the instrument panel, the individual gauges that tell you how the business is performing under the cowling. US payments volume was up 8%, credit was up 10%, debit was up 7%. And management noted that e-commerce continues to outpace face-to-face spending. That matters because digital payments are still taking share from cash and checks. International payments volume was up 10% in constant dollars. Latin America and Europe were steady quarter over quarter. The CEMEA region did step down by about 2.5 points, mainly from the Middle East conflict, but CEMEA is only about 6% of total payments volume. So this is something to monitor, not something that changes the whole flight plan. Now look at cross-border volume. Excluding intra-Europe, cross-border volume was up 11%. E-commerce cross-border volume was up 13%. Travel-related cross-border volume was up 10%. So travel is still growing, but the bigger long-term engine is digital cross-border spending. People buying, selling, subscribing, booking, and moving money across borders. Now, here is the gauge I want you to pay close attention to: value-added services. Revenue there was up 27% in constant dollars to $3.3 billion. That is not just the core payments network. That is Visa building a second revenue layer on top of the network. Risk tools, data analytics, issuer and acquirer services, consulting, marketing services, and other value added products. That is a very important growth engine. Data processing revenue was up 18%, helped by transaction growth, pricing, value added services performance, and cross border transaction mix. And other revenue was up 41%, driven by advisory, marketing services, other value added services, and pricing. Captain's view: every major gauge is in the green. US volume, international volume, cross border, value added services, data processing, other revenue. That does not happen by accident. That is what a high quality network business looks like when the aircraft is still climbing. This is where management shows you how confident they really are with capital. In Q2, Visa repurchased about $7.9 billion of stock. They also paid about $1.3 billion in dividends. Combined, that is roughly $9.2 billion returned to shareholders in one quarter. And then they did something even more important. The board authorized a new $20 billion multi-year repurchase program. Add that to the remaining buyback authorization, and Visa now has about $33 billion of total repurchase capacity. That is not a small signal. You do not authorize that kind of buyback capacity if you think the business is losing altitude. That is management saying, we still like the flight path. Now look at guidance. Full year net revenue growth was raised to low double digit to low teens. Adjusted EPS growth was raised to the low teens. In aviation terms, management did not pull the power back. They raised the flight plan, and there is one more instrument worth noting: stablecoins. Visa is now processing stablecoin settlements at about a $7 billion annual run rate. That run rate grew about 50% quarter over quarter. It is still early, it is still small relative to Visa's total network, but strategically it matters. Visa is not sitting on the ramp watching future payment rails get built around them. They are inside them. Captain's view: strong capital returns, raised guidance, future payment optionality. That is a very confident signal from management. Now, one thing I do differently on SkiesCapital is hold myself accountable to what I said I would watch. Back in day 4, when we covered Q1 fiscal 2026, I gave you a 4-item checklist. Let's see how it landed. Item 1, payments volume growth. I flagged the U.S. consumer and asked whether spending would hold as macro uncertainty and tariff pressure built. The answer: it held and improved. Volume accelerated to 8 to 9% with credit up 10. Resolved. Item 2, cross-border volume. I flagged the deceleration from 13% and asked whether it would stabilize or continue to moderate. This quarter, it came in at 11%. Solid. But the Middle East conflict shaved a couple of points off the CEMEA region. Still healthy, still watching. Item 3, value-added services, 3 new product launches, authorized.net, unified checkout, the ARIC Risk Hub. I asked whether they would get traction, 27% growth, and global platform expansion. That is your answer. Resolved. Item 4, DOJ and regulatory risk. I flagged 2 things: the debit antitrust suit and the MDL interchange settlement awaiting court approval. The debit suit is still pending. No ruling yet. The MDL, Visa booked a $707 million provision this quarter, which signals active movement towards settlement. Still watching, but this is progress. 2 resolved, 2 still on the radar. That is exactly what a pre-flight checklist is for. Now let's look at the honest side of the ledger. What could slow this plane down? Headwind 1, Q3 is expected to be the low point. Management guided Q3 net revenue growth to low double digits, below the full year outlook of low double digit to low teens. So do not take Q2's pace and simply extrapolate it forward. The acceleration is expected to be back half weighted, with Q4 improving as comparisons ease and Visa gets help from pricing, marketing services, and FIFA-related activity. In other words, Q2 was strong, but Q3 is expected to step down. Headwind 2, FX volatility benefit may fade. Part of this quarter's outperformance came from currency volatility being better than management expected. That can help cross-border and FX-linked revenue. But that is not a structural engine. It is not the same as more cards, more transactions, or more value-added services adoption. Currency volatility can reverse quickly, and management faces a tougher comparison in Q3. Headwind 3, Middle East conflict and CEMEA drag. CEMEA represents about 6% of Visa's total payments volume. This quarter, the Middle East conflict reduced CEMEA payments volume growth by roughly 2.5 points. That is manageable at Visa's scale, but it is not something to ignore. If the conflict deepens or expands, the drag could grow, especially around travel and regional spending. Headwind 4, client incentives may normalize higher. Client incentives came in lower than expected this quarter, which helped net revenue. But incentives are part of how Visa competes for and renews major client relationships. As deal timing normalizes and Visa laps last year's low point, incentive growth could step higher in Q3. That would compress net revenue relative to gross volume. It is a known dynamic in this business, but long-term investors need to understand it. Captain's red, none of these are thesis breakers, but a disciplined investor does not only check the tailwinds, you check the headwinds too, every single time. That is how you keep the flight plan honest. Now the tailwinds, the reasons the long-term flight plan remains intact, and in this case, strengthening. Tailwind 1, the network effect is compounding. Visa processed 66.1 billion transactions this quarter. That is roughly 726 million transactions per day. Think about what it would take to build a competing network at that scale. The merchants, the issuers, the banks, the technology, the fraud systems, the global rails. The moat is not just wide, it keeps widening. Tailwind 2, Value-added services is accelerating into a real growth layer. VAS revenue was up 27% to $3.3 billion. Visa is building income on top of its core network. Currency services, risk tools, data analytics, loyalty, issuer services, and other client solutions. This is the business becoming more than just a toll road. This is the toll road adding premium lanes. Tailwind 3, capital returns with conviction. Visa repurchased about $7.9 billion of stock this quarter and paid about $1.3 billion in dividends. Combined, that is roughly $9.2 billion returned to shareholders in one quarter. Then, the board authorized a new $20 billion repurchase program, bringing total buyback capacity to roughly $33 billion. That is management putting real capital behind their conviction while the balance sheet remains strong. Tailwind 4, emerging commerce platforms. Stablecoin settlements are now running at about a $7 billion annualized run rate, growing more than 50% sequentially. And agentic commerce, the idea of AI systems making payments on behalf of users, is a trend Visa is positioning itself inside of, not watching from the outside. These are still early innings, but Visa is in the game. Captain's view, the core network is still compounding. The services layer is growing. Capital returns remain aggressive, and Visa is preparing for new payment rails. That is why the long-term flight plan still looks intact. Thesis status, improving. Let me be precise about what that means. It does not mean the stock is going up tomorrow. It means the business quality is getting stronger, not weaker. The evidence this quarter is clear. Revenue growth remains strong, services are growing, capital is being returned at record levels, and management raised guidance with confidence. On valuation, Visa trades at approximately 27 times forward earnings. The free cash flow yield on enterprise value is around 4.1%. That is not cheap by historical standards, but this is a business with a genuine moat, high returns on invested capital, and a long runway for compounding. A premium is justified. The question is whether the premium is excessive, and at these levels, I do not think it is. 4 things to watch next. First, Q3 results. Can growth hold through the seasonally softer quarter? Second, FIFA World Cup 2026. Cross-border and travel spending could get a meaningful lift as inbound travel builds. Third, stablecoin and agentic commerce traction. Watch for updates on Visa's positioning on the next call. Fourth, CEMEA trends. Does the Middle East related pressure begin to normalize? Keep those 4 in the flight bag. They are the gauges that matter most heading into the back half of the year. Let me bring this in for a landing. As a long-term holder, this is exactly what a quality compounder is supposed to do. Execute clearly, build the moat quietly, and reward patience. The turbulence from macro uncertainty has not changed the flight plan. The gauges are still green. Thesis status improving. This has been Captain Pierce with SkiesCapital. Think clearly, invest better. For educational purposes only, not investment advice. Captain's log out.